Good afternoon, friends. Committee for Capital Market Investor Protection of the ICAI welcomes you, all of you, for this very interactive session on various sources of raising finance through of MSME. As you are aware that MSME plays a very big role in the growth of the economy of our country. Already 68.25 lakhs Udyog Aadhaar number has been created, and 6.3 crore MSME unincorporated in India after this agricultural sector, and more than 11 crores of the jobs are created by this sector if the data goes by 2015-16. So if we can perceive that how influential the MSME sector is, and because of this pandemic, the huge crisis are looming large on this survival of this MSME sector, and that's why government has also given a helping hand through various financial resources like RBI and the banks are giving. So 3 crore something, a lakh crore already the government has announced to MSME sector, and recently the finance minister included professionals also, CA, CS, doctor also included in the hand holding to this loan sector. So we are going to discuss today. We have very nice panel how this MSME can take advantage of the situation. What are the various avenues available to this MSME sector, and how they can be get the best benefit available in this country in this given situation, which we are called new normals. So to begin with, we have the moderator. The moderator of this session is Parth Shah. He is the Merchant Banking Division of Sreni Shares Private Limited, and he is a valuation and MSME listing expert. He has a more than 7 years of experience in capital market, and he has also worked as a vice president of HEM Investment Banking Division for 2 years. We have a very distinguished panel to deal with this subject today. Mr. Amrit Shah, he is the managing director of Moksha Ornament, is a limited listed on NSE Emerge. He has 20 years plus experience of manufacturing gold and gold ornaments. He has excellent understanding of growing trends in the country, and he has the knack to anticipate the needs of the people. So with his knowledge of local and neighboring areas and a number of a strong networking team that offers vital inputs on business development. So welcome you, sir, for this panel. We have Ketan Gaikwad, Managing Director of CO, Receivable Exchange of India Limited, RXL. It's a very innovative kind of exchange there. Mr. Ketan has a career spanning of 28 years in experience in transaction banking in Barclays Bank and Standard Chartered Bank earlier. He started his career with Bank of Baroda, and then he has done this Barclays and Standard Chartered Bank. He is a graduate from Mumbai University and has done masters in management studies from Symbiosis Institute, Pune. He has completed also executive leadership program from INSED, France. And the most important part of Mr. Ketan profile is that he is the like Receivable Exchange of India, a TREDS, like it's a trade receivable e-discounting scheme platform, which has been mandated by the RBI as a joint venture of SIDBI and the NSE. So the Ketan is heading that RXLI. So welcome, sir, for this panel discussion. Then we have CA Usik Gala. He is a second generation entrepreneur who has created a $1 billion potential worth of empire, all at the tender age of 29. So being a second generation entrepreneur, he has played an unparalleled role in shaping his father's textile business, and Somaya Lifestyle Limited is one of the most preferred brand of ethnic wear, and he will let us know how he has his empire has helped him by various sources of financing. And the last but not the least, very important, only women member in this panel is Rachna Bhusari, Vice President of National Stock Exchange of India Limited. Madam is the Vice President of the world's second largest exchange in cash market trades. She is head of the Business Development Initiative of NSC for listing of small and medium enterprise. She is postgraduate in Financial Management and Commerce and Law graduate with 20 plus years of experience in working with NSC, and she is also the vice chairperson of World Federation of Exchange SME Working Group. So with these small introduction of all our panel, we have set up a very wide mix of all experience and knowledge sharing people. So welcome all of you in this very innovative session which we are having in next 2 hours. I also welcome my council colleague and a very person who has helped us to initiate this panel and like it got all these good people. See Durgesh Kabra from Mumbai. Welcome Durgesh for this panel discussion. So now I request Parth to please take over this session and have the very fruitful experience of the members at large who are viewing this panel. So over to Parth.
Okay, thank you so much for kind words. Let us start with Mr. Ketan. Mr. Ketan, can you get us through the entire presentation that you have prepared so that everybody can get benefited by the threads? You have to unmute. I guess, sir, you kindly unmute this.
Oh, sorry.
Yep.
So thank you all. This has been a fantastic gathering of people, and this is the first time I'm having a session with WIRC, the Institute of Chartered Accountants, and it's a privilege to be here. And I can see a lot of people I know. Rachna, I'm working with Rachna and Mr. Amrit Shah, Mr. Durgesh Kabra, Mr. Oshik Gala, thank you, Mr. Rajit Agarwal, for a wonderful introduction. So I'll take maybe 20-25 minutes on the presentation. So it's very necessary for people to know what is TREADS exactly, and that is exactly what I'm going to talk about. You need to help me out to tell me whether the screen is, can you see the screen? Can the screen be seen?
Yeah, it's visible, it's visible.
Okay.
It's visible.
So today I'm going to talk about Receivables Exchange of India Limited, and basically primarily on TREADS platform and why TREADS is the need of the hour. So we always keep on hearing about the MSMEs, that MSMEs are 65 crores MSMEs in India. 6.5 crores MSMEs in India, providing jobs to 11 crore people, contributing to 29% of India's GDP and contributing to 45% of total exports. But we have a very dynamic minister and a dynamic government over here, and very clearly they have mandated, at least before the COVID scenario, that they were talking about adding 5 crore jobs over here. And very clearly the mandate was that this 6.5 crore MSMEs should be grown to ensure that they contribute to at least 50% of India's GDP going forward. I mean, that was a pre-COVID scenario, and that was the mandate which the government was working on. And it's a fact. So when we say that, they are these MSMEs contribute to 29% of India's GDP, why is it that, they are not growing, or why is the problem? The problem is always all about payments which are not made on time. So there is always a delayed payment for all these corporates, for all these MSMEs. There is always an issue that whenever a small MSME is applying to large corporates, it's always a attitude of a patriarchal attitude from the large corporates, who always end up saying that, look, the fact that you're supplying to me is a big thing for you. So it's always that way, that we always have an attitude of the corporates, and they always end up using the MSMEs as a bank, wherein they will want the MSMEs to ship the goods on time, supply the goods on time, but they will never make the payment on time, and that's a fact of life. So when this Times of India did a study somewhere in 2019, this was pre-COVID scenario, in November 2019, they found that 70%, almost 70% of the MSMEs do not receive the payments on time. Although there is an MSME Day Act which says very clearly that the MSMEs have to receive the payment within 45 days, but that's never the case. They never receive the payment on time. And when they did a survey, they found that 70% not receiving the payment on time. In fact, 27% responded very clearly saying that they receive the payments always after 90 days. And very clearly, of that MSMEs which do not receive the payment on time, they 17% have very clearly told that they always end up writing off these payments, and that's a fact of life. And who are these troublesome customers? The troublesome customers are government and PSUs, large corporates and all that. So when the survey was done at that point of time, if you recollect, the finance minister during the Diwali time had come across and said that 48,000 crores of payment was due from large corporates, and the 40,000 crores payment was due from PSUs. 48,000 was due from PSUs and large corporates of 40,000. And they had mandated that they will clear up the payments. But right now, today, post-COVID scenario, if you've read the articles in the paper, this figure has gone to at least 5.5 lakhs crores. And that is the reality, that 5.5 lakhs crores is the payment which is delayed, and especially during the COVID scenario. So what are the government efforts which were taken up by the government proactively? So realizing that the MSMEs are not growing, and always a perennial problem is there that the payments are not received on time, the MSME Act was put into picture, wherein the MSMEs were ensured, they were at least told that that the MSME should receive the payment within 45 days. I mean, that was the MSME Act, and which is still there. In 2012, the government gave more teeth, saying that the corporates which procure from the MSMEs, they have to disclose in the audited accounts and how much is the payments which are due from MSMEs. In 2015, MSME Samadhan portal was set up. Very clearly, the Samadhan portal, its whole intention was that the MSME should have a redressal mechanism or the grievance mechanism that they can go and complain against the large corporates. But honestly, we never know the reality that not many MSMEs have the tooth to fight against the large corporates or even the government departments or the PSUs, and that's the reality. In 2015, RBI came out with TREDS receivable system, the trade receivable e-discounting system, normally called as TRED system, and I'll talk much more detail about it. And 2019, RBI set up a utility payment service wherein this utility platform can name and shame the customer, name and shame the large corporates who don't make the payment. And that is something which is the WIP. This is the background and evolution of TREDS in 2008. From 2008 to 2017, this is the journey for TREDS platform. So the entries were set up, and there was a TREDS engine, there was a trees. This was an engine which was already there with NSE, and said we were working on discounting, MSME discounting bills over there. So the Financial Sector Committee report came in 2018, and they recommended that we should have something on the background of NAFIN, which is a Mexican model. Although the TREDS model, which has been set up now, is a totally different evolution, but primarily it was the NAFIN model is something which gave an idea to RBI that we should have something like this in India. So RBI kept on working about it, and then RBI issued the guidelines in 2014, and SIDBI and NSE applied along with other parties for the TREDS license. In 2015, SIDBI and NSE got a license, and they formed a company which is RXL, which is Receivables Exchange India Limited. And final approval came in December 2016, and the first transaction was executed in February 2017. So RXL was born in last year, in 2016 February, and the first transaction went in live in 2017. So all about RXL is basically RXL Receivables Exchange India Limited is a TREDS platform, which is primarily promoted by SIDBI and NSE. SIDBI, you know that very well. That's an institution which is at the forefront for the development of the small and medium industries. National Stock Exchange, as what you clearly said, that the largest exchange in the world. How to become the largest exchange now, I think, is the second largest. And State Bank of India, these are the two joint promoters, SIDBI and NSE. And State Bank of India, ICAI Bank, and the Yes Bank are the three other stakeholders which are there. And clearly, you can see from the mix of the promoters of RXL, it's clearly strong financial institutions who are always number one in their own area of wherever they are there. So RXL was set up with the idea that it should be a seamless digital platform which will provide the liquidity to the MSMEs within 48 hours at the competitive rates. That's a mandate of RXL, that RXL plans to serve 1 lakh MSMEs across by FY 2020. Then that's the mandate which I carry, that by 2022 we should have at least have 1 lakh MSMEs and we should be serving for them. So what is TREDS exactly? So TREDS is basically a trade receivables discounting system, and where we have the buyers, which are the large corporates, PSUs, and the government departments, In fact, we are talking to even state governments also now to enroll on the platform. And then you have the MSME sellers. So this platform is primarily meant only for MSME sellers. And very clearly, these MSME sellers cater to the buyer. So you have an exchange on a platform. It's an exchange wherein you will have the seller selling to many buyers, or you will have a buyer procuring from many sellers, or vice versa. So that can be the scenario. So you can have one to many, many to one kind of a scenario where the supplies can happen either ways on the platform. And you have the platform is the e-discounting platform, which is our platform. And on the platform, we have the third participant, which is the multiple financiers, which we are there. So we have private sector banks, public sector banks, MNC banks, and the factoring agencies, which are there, factoring companies, which are there on a platform. So primarily, the RXL is a platform which has the sellers, which are the MSMEs. We have the buyers, which are the large corporates, and the financiers are there. So they need to register on a platform. So, so the way transaction happens, the way the RBI guidelines are there, they all need to register. And the platform has to do the full KYC on the MSME sellers, buyers, and the financiers. So they have to, when I talk about registration, we have to do full KYC, and they have to execute agreements on the platform. So these individual seller will have to execute an agreement with the exchange. The buyer will have to execute an agreement with an exchange. The financier will have to execute an agreement with the exchange. So that's how it happens. So they don't have to, for the financing part, they don't have to execute any agreement with either of the parties. None of the parties have to execute agreement with each other, but only with the exchange. So by doing so, each party gets a right to the receivables, or the financier gets the right to proceed against the buyer in case of non-payment. So when I talk about the one-to-many, many-to-one exchange, there are many things which happens over here. So when the buyers get registered, then they refer us to the list of sellers with whom we talk, these are primarily the MSME sellers. So we enroll the MSME sellers, we register the MSME sellers on a platform. So when we do that, we also do a linkage between the buyer and the seller. So that linkage ensures that this particular seller is the seller for that particular buyer. At the same time, we also ensure that what is the cap rate, who's going to bear the cost, default cost rate, the default cost bear, the cost splits between the two parties, which is the buyer or the seller, the transaction charge. Basically, when we are running the platform, we also have transaction charges on the platform. And what is the default credit period? So normally the default credit period is decided between the buyer and the seller. So that is something which is looked upon on the exchange. So when I talked about, so this is a little bit animation which I will show it to you. So when I talked about RXL, which is the Receivables Exchange India Limited, and we have the three parties over here, and which is what I've talked. And primarily what links between the parties is the goods and the services, which get supplied by the MSME sellers to the buyers. So we have the MSME vendor on one side, the buyer on the other side, and the financier on one side. So the MSME vendor supplies the goods and services to the buyer. So once he supplies the goods to the services to the buyer, he uploads the invoices on the platform. So when the invoices are uploaded on the platform, it has to be necessarily accepted. So when the invoices are uploaded by the MSME vendor, once he supplies the goods, it has to be accepted by the buyer. And when the buyer also uploads the invoices, it has to be accepted by the vendor. So this is what it is. It has to be noted that this is a without recourse mechanism for the MSME vendor. So it is necessary that the invoices have to be accepted by the buyer on a platform. So once the invoices are accepted on the platform, then the buyer, and since the risk is on the buyer, then the invoices become visible. So once the counterparty's approval is done, then the invoices become visible to the financier. So there is something called as so once the factoring unit is created, and for the factoring unit, the financier starts bidding. The financier looks at the buyer's risk. So they look at the counterparty risk of the buyer, and accordingly they start bidding for it. So there is, when you have a top-rated buyer on the platform, there is a intense competition between the financiers to secure that particular asset, because this asset priority sector lending treatment also to the financier. So if you know about priority sector lending, it's a very cost-effective mechanism for the financier to procure the priority sector lending at some margin, which otherwise the priority sector lending assets do not give. So once they have bid it, then the bidding has to be accepted. So the bidding has to be accepted by the party which is bearing the cost. So assuming that the bid has been, if the MSME vendor is accepting you're going to bear the cost, then they have to accept the bid. If the buyer is going to accept the cost, then the buyer has to do the acceptance of the particular transaction or the rate. So once the acceptance is done, then there is an obligation which is being created between the financier and the buyer. And once the obligation is created, then the payment happens on the next day. So assuming that, if the invoices are uploaded by 4 o'clock, before 4 o'clock, and the acceptance is done by the buyer and the financier bids for it, and the financing can happen, and the MSME vendor can get the payment on the next day itself. And that's how this is so completely digital that this is possible even when the invoices are uploaded at 3:30 or 3:30 or quarter to 4. And if the buyer is active and buyer accepts the invoices, the financier bids for it, and the MSME vendor can receive the payment the next day. And that is the beauty of the entire system. And this entire system, whatever I have told you, is completely digital. And once the financier is accepted the bid, and the financier, once the MSME vendor or the buyer who has accepted the bid because of the cost, the credit will happen to the MSME vendor the next day by 10 o'clock. He will have the funds in his account. And this entire mechanism is built on the NPCIL payment system. So we are a regulated entity, come under the Payment Systems and Settlement Act, and we are regulated by RBI. And on the due date, we debit the account of the buyer. So we do not wait for the buyer to make the payment. Our debit file goes and debits the buyer's account on the due date, and makes good for the payments on from the financier. So depending on who's bearing the rates of the interest, that is whether these interest is borne by the seller or by the buyer, the factoring process takes place. So assuming that the rate of interest is borne by the seller, then the seller uploads the invoices. So this is how the transaction will work. The seller uploads the invoices. The buyer accepts the invoices. It's very important for us to note that on this platform, the buyer has to necessarily accept the invoices on the platform, because this is a without recourse program for the seller. And on the due date, the risk is predicated on the buyer and not on the seller. So once the buyer is accepted, he becomes his obligation to make the payment on the due date. And so that's why when the buyer accepts the invoice, the financier will bid for the invoice. And once the financier has bid for it and the seller has accepted it, the financiers disburse the funds to the seller, and the seller receives the funds within 48 hours. And on the due date, the buyer's account is debited by the platform by sending a file to their account wherever they're holding the account. So primarily we hold a NACH mandate from the buyer. It's a very mandatory instrument which is there, which is a part of the registration process also. It's compulsory to be given. It's mandatory to be given by the buyer to the platform. And on the due date, the financier receives the payment. And the second process is where the buyer say that, look, I will make the payment, or I will make the interest. I will bear the interest, on the particular transaction. And this happens in cases where the reverse factoring. So this is called as reverse factoring, wherein the buyer takes some discount from the seller and then decides to upload the invoices and then go for an extended period. So tomorrow you have a scenario where the supplier was supplying goods to the buyer, but the buyer goes for an extended period, and then he agrees for uploading the invoice and makes the payment to the supplier, which is the full amount of the discounted amount. At the same time, he says that I will make the payment to the financier on the due date. So that's how it happens. The buyer uploads the invoice over here, the financier bids for it, the buyer accepts the bid because he's going to bear the cost for that particular invoice, and then the financier will disburse the funds to the seller. The seller receives the funds within 48 hours, and the buyer finances the buyer makes the payment to the financier on the due date. And that's how this entire transaction happens. So reverse factoring is also a process. So on our platform, we have seen the transactions, 50% of the transactions happening by factoring process, or it can be reverse factoring. So what are the benefits for the MSME sellers? So it's very important and pertinent to know that this platform ensures that the seller receives the payment within 48 hours. So he receives a quicker payment. Again, multiple financiers, so he gets an access. So assuming a scenario that tomorrow the MSME seller wants to do the financing or the bill discounting, which is there. So he will go to his bank, he will have to put some security and take a bill discounting facility limit, and then against that he will go and do the financing. Here you have a scenario where he can just come on the platform, see that his buyer is also registered on the platform, and once the buyer has accepted his invoices, he gets the finance within 48 hours. So that's how simple it is. At the same time, he also gets an access to multiple financials. And the rate which is discovered on the platform is the lowest, because we have seen the rate on a platform ranging from between 6% to 9%. And if the buyers are top rated, something like a BHEL or the IOCL or BPCL or any top corporates like that, we have seen the rates going up to 5.6% or 5.7% also. And imagine a scenario where the MSMEs are getting the rates of interest as 5.6% or 5.7%. Okay, that's maybe to the large corporate, but when you talk about the other corporates, the range is between 6% to 9%. And again, it's completely transparent, and then there is a lot of competition to get that particular asset. So we've always seen that the rates of the rate of interest moving down. Sometimes we've seen the rate in front of our eyes. We have seen the rates moving down by 100 basis points also. And the most important point for the Trades platform, most important point to note by the MSME sellers is that this is a completely without recourse borrowing for the MSME sellers. And that's why it's very important to note that tomorrow, once the MSME seller comes on the platform, gets the invoices financed, it's a cash for him. He can just convert it. It's cash which is converted, and he can remove his zero as his receivables. So you can imagine a scenario where he does not have to do any follow-up with the buyers, which currently he does. 50% of the time is gone in falling with the 5 buyers on the thing. As far as the buyer is concerned, we have seen that many buyers have evolved their supply chain mechanism based on the threads, the way they are functioning on threads. So we have seen that they also know that they don't have to do any follow-ups for making the payments to their suppliers. At the same time, we have also seen that they depending on the rate of interest and depending on the facilitation which they are doing for the MSME vendors, they have also enhanced the procurement terms. So we have seen in a scenario like BHEL. In BHEL, BHEL got started with us somewhere in 2019 September. They did transactions worth 300 crores, and we got a letter from their association, MSME association, very clearly telling us that by doing the transactions of 300 crores, they have saved interest of 6 crores during the 6 months period. And very clearly, we have a letter which really has appreciated the fact that yes, we do a lot of saving. And so what happens is there's a saving which is done by the MSMEs. So then the corporates also understand very clearly that the MSME is saving it because there is no delayed payment. So then they ensure that the procurement terms is strengthened over there. And this kind of a platform, when you have it, you also strengthen your relationship with the supplier, because when you run a supply chain mechanism, your strength is as good as the weakest link in your supply chain. And many corporates ensure that the supply chains are functional, especially during the COVID times. We have seen that many of the corporates came and very clearly said that they're not going to make the payment. So we keep on telling the corporate that, look, this is the best thing which can happen during this particular period, because which platform can ensure that you can make the payment to your MSME supplier. At the same time, you can go for an extended period term for your credit period. So you can also get time or a breathing period for you to to settle your supply chain mechanism and get your cash collected or whatever, and then and make the payment to the platform. We also have seen a lot of corporates go for seamless integration. What is the benefit for the financiers? The financiers are benefited by the fact that the funds are disbursed, they get the priority sector lending treatment. That is one thing. And plus, when we have seen on a platform, there is a low risk of default. In the platform, there are 3 platforms in India currently, which have got license from India, which have got license from RBI. One is the Receivables Exchange India Limited, which is our platform. The second one is Invoice Smart, which is being promoted by Axis Bank, and the third one is M1 Exchange, which is promoted by Mind Solutions, Gurgaon-based company. So we have seen that between the 3 exchanges, In the last 2.5 years to 3 years, we have done transactions worth around 19,000 crores, and we are catering to at least 10,000 suppliers which are onboarded on the 3 platforms together. We have also seen that the benefits for the financiers are, automated reconciliation happens for that particular, core systems. At the same time, the financiers have the access to the best quality buyers, because that's one of the mandate which is given by the government. So what are the initiatives which have been taken by the government of India and RBI? So when the TREDS platform went live in 2017, the government mandated that all the PSUs and the government departments have to register on the platform. So it's a mandatory requirement of the government that all the PSUs and the government departments have to register on the platform. All the advances financed through the TREDS platform are categorized as a priority sector lending. Very clearly that to ensure that there is a lot of push from the PSUs to finance on the platform, the government gave the mandate that whatever financing is being done on the TREDS platform, they will get priority sector lending treatment. In 2018, November 2018, all should note that the government made it mandatory for the companies with turnover of 500 crores and above. They have to necessarily join the TREDS platform. Very clearly the mandate is from the government that they have to start, they have to join the platform and they have to start transacting on the TREDS platform. The government and what we have seen is that the government has been very active in understanding what is the growth, what is the progress which is happening on the TREDS platform. So we have seen it in the last 3 months, 3 to 4 months, that the government is keenly following up on how much are the transactions which are happening on the on the TREDS platform. So in fact, the government is in the process of making it mandatory for the PSUs to compulsorily start transacting on the platform. This is something which we have heard, and maybe that can become a reality, that the priority sector, that the PSU, public sector units, have to start transacting on the platform. The government announced that all the NBFCs in budget 2020-21, the government announced that all the NBFCs also have to come on the can also finance on the TREDS platform. So currently we have only the public sector units, public sector banks, private sector banks, MNC banks, and factoring companies. But now they have also allowed NBFCs to come on the TREDS platform. But yeah, Factoring Act is something which needs to be amended. The TREDS platform is also integrated with the GEMS platform. If you heard of GEMS, is a government e-marketplace, which is a mandatory requirement for the MSMEs for the government to procure from GEMS platform, the government e-marketplaces. So again, we also integrated with them to ensure that whatever supply which happen on the GEMS portal get financing on the TREDS platform. So we have been canvassing with the government in the last 3-4 months or more than that. We are telling them that you have to make it mandatory for the MSME payments by the PSUs and the state enterprises to start mandatorily route the transaction through TREDS platform. So this is something which can become a reality, which is what we are working towards. They have issued circulars for the PSUs to come and start doing the transactions on the platform. Very clearly, we are telling the government that, look, in India, what happens is when a circular is issued, the Indian people always try to find out ways and means of, how to avoid it, jugadu kind of structure. So what happens in this year is that the corporates and the PSUs are just enrolled on the platform and they're not transacting. And we have seen the transaction. So when you ask me, the potential of the platform is something like 1 lakh crore of transactions can happen on the platform per annum. But right now we are talking about 16,000 crores of transactions which are happening. Again, during the COVID crisis, we have seen that there was a lot of resistance, or I would say due to operational issues, reluctance to come on the platform. But we have seen that has gone up. The transaction on the TREDS platform have gone to the pre-COVID level. So what we were talking about is that in March 2020, we were talking about transacting volumes above 400 crores. And in the month of July last month, the ended 2 days back, we have done transactions worth 400 crores, and this month we are targeting 500 crores and above. So, and we are trying to sensitize many of the associations of MSMEs to come on the platform, register on the platform, because this is a platform where there is a lot of transparency, where there is a lot of rediscovery mechanism, and even when the corporates are also running a supply chain program, we always end up telling them that, look, you can come on the platform, since you have the visibility of so many banks over there, you can always have a rate discovery mechanism wherein a rate can be discovered for your kind of risk. So that is something which the corporates have liked it. and we have seen an increased uptick of the corporates during the last 2 months or so on the platform. The government has been very kind, and they have canvassed that till September 2020, SEBI has come out with a plan that that we should be onboarding the online registration or the MSME's registration on the TREDS platform is becoming free. Otherwise, normally we charge 2,500 for MSME registration, but MSME registration is free as far as the RXL or any of the three exchanges is concerned till September 2020. And these are normally the documents which we call for when we do the registration on the TREDS platform. So very clearly that the TREDS platform is a need of the hour, because it's very important that the MSMEs have to register on the TREDS platform. And there is so much of awareness program which is going on by RBI, government, many other places wherein they're making it mandatory that look, this is something which the MSMEs should get registered on, and then later on the buyer also will come in. And once the buyer comes in, then you can always ensure that transactions can happen smoothly on this platform. So that's why we always end up saying that look, the TREDS platform is a need of the hour as far as the MSMEs are concerned, and especially in the times of crisis like this, wherein the MSMEs can get the payment on time or with less delays. At the same time, the corporate also can get an extended period for doing the financing. So that's it from my side. I am ready to take questions, but I think we can take the questions after all the dignitaries have made the presentation. So over to the presenter part.
Yeah, sure. Thank you so much. It was really informative from your end. We have got one question where the participant has asked why CS certificate is being made compulsory as far as the KYC is considered, where you're already taking it in registration.
See, CA certificate is basically to ensure that the CAs normally certify what is the investment in plant and machinery. At the same time, the CAs also, normally the CAs which are there, they also certify which of the accounts with the SMEs are holding. Because what happens is, because when we are doing the financing, it is a mandate from the RBI that whenever you're doing the financing, to avoid double financing, you have to ensure that the proceeds are credited to the MSME's working capital account. So in such a case, then we always insist for a certificate from the chartered accountant to ensure that the MSMEs, because normally when you ask for a self-declaration from the MSMEs, it will come, but we need a third party to certify that if they can give it to us, it will be great, because that is something we hold it, that the chartered accountant has done a due diligence and given it to us. So the chartered accountant does two certifications. One is about the investment in plant and machinery, and second one is about the account which the corporate is holding. Otherwise, normally what happens is there is always an MSME which can always tell you to credit a current account instead of a working capital account.
Oh, right. And how many MSMEs are currently registered on our platform?
So currently between the three exchanges, there are around 10,000 MSMEs which have got registered. On our platform, we have around 3,000 odd MSMEs which are getting registered at the speed of at least 800, 500 to 600 every month, because it's a huge due diligence process also, which is mandated by RBI, which is there for us.
Oh, okay. Thank you so much. It was really informative. I will take the next question for Rachna. So Rachna, my question to you is can you please elaborate on how easy or how difficult it is to get listed on NSE Emerge platform, and basically what are the prerequisites, and how the process goes, and what are the eligibility criteria?
Okay. Thanks, Parth, for giving me a fair journey path. I would say that how do I take this session ahead, and Ketan, I think it was a very, very informative session, and I think I totally agree with you. The need of the hour is for MSMEs to tap the capital and whatever funding mechanisms are available to you. So I think I take that point, and I think all the SMEs are really going to benefit out of it. So good afternoon to each one of you who's attending this session, and I'll try to make it as crisp as possible, and I'll take you down the path of why this SME platform was introduced, what is the eligibility criteria, And I will also be talking about how simple it is, and I'll also share some. I think we have two listed companies with us, Moksha Ornaments and Sumaya Lifestyles, who can actually vouch for that. It was a simple process to list onto the stock exchange. So I will be just saying what it takes to list, but I think they will be more than happy, and I think it will be better insight when you have the promoters talking about what the journey of getting listed was. It's a fairly simple process. There's no doubt about it, and I'm sure my entrepreneurs would talk about that process as well. And I also will talk about what is the benefit of listing on the SME platform. So to begin with, this is a question that is always there in the minds of entrepreneurs and investors. Was there already an existing platform where the corporates were raising funds? So what was the need for a special platform for the MSMEs or for the SMEs? And, when you go back to 2010 and 2012, it was realized that though SMEs are the largest contributors to the industrial output or to the export and the largest employment generators, the contribution to GDP was not very significant. And on further analysis, it was realized that one of the biggest challenges that these SMEs faced was lack of access to funding. Traditionally, the SMEs would be funded through the funds of the proprietor, through the funds of the promoter, his family, friends, and then they would also move on to the debt funding available from the banks. But beyond that, there was no or very little scope for the SMEs to actually fund their business growth. And as a result of which, either they were not able to, sustain the requirement of a growth, or they were not able to grow at all. So when this challenge was analyzed, it was realized that the SME, the main board was already in existence, but the criteria and the expectations of the investors were so different that these companies would not fit into the landscape to be able to raise funds through the IPO mechanisms on the main board. And hence, a different platform was thought about. And in 2012, it was kicked off. The SEBI came up with the regulatory guidelines for setting up a small and medium enterprise platform. And NSE started the platform in the same year, 2012, and we called it Emerge, because we believe that this is a platform where the small and emerging companies can actually propel their growth stories and move to the next level. So that's how the genesis of Emerge platform. Now comes to the question of eligibility criteria. A lot of thought process has gone into, which companies should be eligible, what should be a definition of an SME. So a very simple definition of SME was defined, and SEBI said that any company with a paid up capital of less than 25 crores can list themselves onto the stock exchange. So that was the only definition, or that was the only eligibility criteria which was specified by SEBI, only on the paid up capital. So here the point to be noted is that, if you are, whether you're registered as an MSME or not in the MSME Act, absolutely has no correlation to you raising funds onto this Emerge platform. Because if your paid up capital is less than 25 crores, whether you are registered or not registered in the MSME Act, you can still tap this Emerge platform and raise funds through the IPO mechanisms or through the public funding mechanisms. That simple was the definition for or eligibility criteria stipulated by SEBI. What NSE did further ahead is added furthermore eligibility criteria to list onto the stock exchange, and NSE stipulated conditions like that the SME should have 3 years of track record. Out of the 3 years of track record, there should be cash profits of 2 years, and the company should have a positive net worth. So these three criteria were additionally added by NSE when they introduced this platform. Now, again, an important point here is that when NSE's criteria stated that it is 3 years of track record, it was taken into consideration the factor that as an SME, you may not be existing in form of a private limited company or a public limited company, or and you could be existing as a sole proprietor, a partnership, LLP. In any form, you could be existing in your business enterprise. But that does not stop you from raising funds on this platform. So the 3-year track record means that if you were in the same business, in whatever kind of an entity you were, you carry forward that track record and take the benefit on conversion or on formation or incorporation of a new private limited company also. So that's a big advantage that most of the SMEs started taking off, is that whether they were sole proprietor or they were a partnership and just got incorporated 6 months earlier, the track record of the promoters to carry on the business was taken into consideration and the company started getting themselves listed onto this platform. Again, cash profits, we are very sensitive to the fact that the companies may not have a net profit. So we said that any company with profits at the operating levels could be taken into consideration for listing onto this platform. And a positive net worth is given, we see it being fulfilled on most of the occasions. So that's how the NSE eligibility criteria, very simple, fairly simple to understand and very easy to fulfill as well, have been stipulated by the exchange. When we specified the eligibility criteria and when the regulators put up a regulatory framework, a serious thought process was also involved that this process should not be time consuming, this process should not be cumbersome, and this process also should not have too many obligations and responsibilities cast onto the promoter because they are now a listed entity. So these factors were considered while the framework was being put in place, and a simplified framework was put in place. So when I say simplified framework was put in place, the first benefit that was given to an IPO process in the SME exchange was that the SME IPO approvals could be given at the exchange level. There was no need for a SEBI approval to be given it. The exchange observations and an approval, in principle approval by the exchange itself was sufficient for a company to start their IPO or to kickstart their IPO into the capital market. So that was a big leeway that was given. So what happens because of this? It's less time consuming. The time taken by the regulator to give approval is really is drastically reduced, and now absolutely not there. It is not there at all for the time taken for the regulator to give approval, because you don't have to go to the regulator for an approval. Exchange is your approval authority here, and generally we have seen that, on the main board, an IPO takes an approval of 8 to 10 months, but on SME you see an IPO taking an approval in the range of 2 to 3 weeks. So again, the time-consuming, it's not a time-consuming process. It's a very, very quick and a seamless process that happens at the exchange level. Another important point of differentiation here was to make this process, again, a very seamless process, was that a concept of 100% underwriting was introduced. So this facilitated that the entrepreneurs, even if they have a portion of their IPO undersubscribed, the merchant banker would take on the responsibility of completing the IPO and underwriting the unsubscribed portion. So this was again a very important step in the framework of SME approvals or SME exchange guidelines. A lot of thought process went into underwriting, market making. Again, a very important feature. SMEs, by virtue of their investments, could be a risky investment or high return, high risk kind of an investment. And because of the requirement of lesser number of allottees to complete an IPO, it is quite possible that this segment will not be a very liquid or a highly liquid kind of an instrument. So what was thought about for this also was that in order to ensure mandatory liquidity, a concept of market making would be existent in this platform. So what does a market maker do is he subscribes to the inventory at the time of IPO and provides a buy and a sell quote during the company's tenure of 3 years on the SME platform. So what happens because of this is a mandatory liquidity is provided. Again, this is very beneficial to the promoters as well as to the investors. So all these thought processes were put in place and the SME segment was introduced. And, over a period of time, if you look at, people have appreciated these kind of dispensations or these kind of framework. And today we have more than 200 companies that have got listed on this platform. And cumulatively, these companies have raised more than 3,200 crores of funds. And an important milestone in the SME platform is that once you are listed on the SME platform, it opens up your avenues and provides you an option to migrate to the main board, which otherwise would have been difficult for an SME entrepreneur to list themselves directly on the main board. So this SME platform provides an option to the promoter wherein he can actually list himself onto the SME platform, and after being 2 years on the SME platform, migrate to the main board. Again, this is an option. There are many companies who do not exercise this option and still prefer to remain onto the SME platform. There is no compulsion by the exchange for any company to migrate. It's just left onto the discretion of the promoters. But we have seen, again, many promoters, vying for that important migration timelines and migrating to the main board, because, that's where they feel the growth story can actually create a larger investor base, get the right kind of investors, get all kind of investors onto this platform. And hence, around 35 companies have got migrated to the main board of the stock exchange. So again, a very, very, I would say, a very aspiring, fulfilling takeaway of the SME platform is that option to migrate to the main board. While we are talking about, how simple it is to list onto the stock exchange and how different it is to list onto the stock exchange from the main board, it is also important to take care of the factor that, why should a promoter list? And what stops a promoter from thinking about this listing? We all know that we have like 6.5 crores of SMEs. But if we have to take that number into consideration, it's that only 200 companies are listed onto the NSE platform and 300 on BSE. So cumulatively, around 550 companies are listed on this platform. So why is that companies are not listed onto this platform, or why do people not list onto this platform? There are multiple apprehensions and misconceptions that surround this platform, that are surrounded around this platform. And most common ones, I'll try to just talk about them. Is the first one being is that being listed takes away my ownership and control on the company. That's the first misconception that I have come across entrepreneurs raising to me in every forum, or their thought process behind not listing is lack of ownership or loss of control. So to this, my answer would be that, you only have to dilute 25% of your equity. That's the minimum requirement. The dilution of this 25%, the 75% is still held by you and your family members and the group of people that you wanted to be holding the security. So actually, you do not lose any control. No shareholder, by virtue of holding a single lot of shares or by holding multiple shares, can dictate your business decisions. So your autonomy to conduct your business remains with you. However, yes, because of listing, there is a disciplined way that your board is required to be formed. There is a independent director requirement that needs to come into your board. So your decision making could be changing a little bit based on the composition of a board, and you need to now think about the other stakeholders also while you're taking your decisions, and not only just think about what you feel is the right way of running the business. Apart from that, there is absolutely, you do not lose control. You can still go ahead and do what you want to do. Only thing is, you're more scrutinized, you're more regulated, you have to give disclosures. That's the only difference. Otherwise, you run your business the way you were running earlier. So there's no loss of control, or there's no, I would say, loss of ownership due to listing requirements. So that's the first misconception that, we come across. The second major one is that being a listed entity, being a regulated entity, casts a lot of onus and responsibilities on the company to disclose a lot of information, and I may lose confidentiality. So two things. One is I lose confidentiality of my company's information, and second is that there's a burden on me for disclosures. So again, if you go by the regulations and by the requirements of listing, what you have to disclose is on a half-yearly basis your financial results, which for the main board is quarterly. So for SME, again, there is a leeway. You can disclose your half-yearly financials. So the only disclosure that increases is that you have to do a half-yearly disclosures of financials. You have to put up your shareholding pattern, which is against a very, very, very operational routine kind of a job, doesn't involve many activities by an entrepreneur. So it is not that you have to give a lot of information to the exchange. Yes, but it is very important that now, since you are a listed entity, you have stakeholders and shareholders who have got attached to your company. So transparency is very important in your functioning. And as a result of this, you have to disclose information which would help the investors take an informed investment call onto your company. But regulatorily, there is no very high disclosure regime that has been cast on you just because you are a listed entity. That's the second thing. The third thing about is that, I lose confidentiality of information. Believe me, the information that you disclose onto the stock exchange is not at all confidential. We do not ask you to disclose your trade secrets or your business secrets or your business formulas. We only request you to give information about which helps the investors take an informed decision. So that's a big, again, concern is apprehension that promoters face while listing onto this platform. One, nevertheless, people also feel that it's a very expensive affair, and to get listed onto NSE is a huge task, and I'll have to spend a lot of money, and I'm not too big a company to list onto the stock exchange. So again, these are mindset beliefs of a promoter. This is all about, how a promoter thinks or plans his journey ahead for a future. It is not that it is just a today, one day experience, or it's a one day thing. It's a journey. And you have multiple milestones during this. Getting out, big, small scale of operations should not be a stopping factor. In fact, your vision for your company has to be so clear that you know that once I list, this is where I want to be 5 years and 10 years down the line. So this actually lays forward a path to you to plan your future, to grow your company in a particular manner. So I have never seen it as acting as a kind of a showstopper, acting as kind of a path breaking or a path stopping kind of a journey where promoters be burdened because they are now a listed entity. So again, that is not a scenario that I have ever come across or I have been told by promoters in the 3 or 4 years that I have been in the SME segment. Why should a promoter list onto the stock exchange? The most obvious benefit that a promoter enjoys is that he's able to get capital to fund his business. So that's the most obvious advantage that a promoter gets out of listing onto this platform. There are various other benefits that a promoter or that a company enjoys by listing is. Listing provides higher visibility. Any listed company has higher visibility than a private limited company, or a privately owned company or a family business. So a huge amount of visibility is given to a listed entity. Credibility of the company goes notches higher if it's a listed entity. We've seen banks having favorable banking terms or banking terms and conditions loans while they are a listed entity. What they offer to a listed entity than an unlisted entity. And I'm sure Amrit Shah and Toshi Gala will also share how people's perception towards their businesses have changed once they have been a listed entity. So again, like I said, the credibility goes notches higher. And since it's a listed entity, it's assumed, it presupposes that the corporate governance norms will be in place. So that again adds credibility, adds transparency to the decision making, gives confidence to the investors about the decision making. So that all just helps you and bring more visibility to the company. An important benefit again that I have seen personally that people are able to offer ESOPs to their employees because they're a listed entity now. So retaining talent was always a challenge for SME segment, but this is an important tool which they have used and started, retaining talent based on giving ESOPs to an employee of a listed company. So that's again a wonderful benefit. There are multiple benefits. I can go on and on. One of them is that you have shares with your collaterals. They can be used as collaterals, and you can further infuse capital into your business. Listing onto a platform opens up various avenues for you to raise further capital. You can have a preferential allotment. You can have a rights issue. We've just seen how the rights issue Reliance has scaled through, and how company has been able to actually monetize themselves and get more out of the investors who have reposed confidence in investing in companies. So it opens up multiple avenues for companies to raise funds at multiple times and fund their growth adequately at various points of time, and actually have a great growing business, so that all the stakeholders benefit out of it, and even the promoter is able to enjoy a larger corporate benefits once they are turning into from a smaller company to a larger company. So it's a multi-fold, multi-bagged or a multi-benefited proposition to list yourself onto a stock exchange. Another thing that we come across is that promoters ask us that what should we do? What should we do to get ourselves listed? How should we prepare ourselves for listing? So I just let me be very realistic about this. Is that today, because of the pandemic situations, the need of the fund for every promoter is paramount. But let me tell you one thing is that listing is not going to be an immediate solution for any fundraising options. Listing takes time of at least 3 to 5 months for you to get yourself into the groove of listing, prepare your documents, and it's not about immediate funding that you can acquire because you want to list yourself onto the exchange. This is a journey that you have to start. And while the COVID pandemic has thrown open various challenges to the entrepreneurs, most of the entrepreneurs have also realized the need to relook at their business strategies, to relook at the way they have been doing, because the normals have shifted. There's a new normal that has emerged now. So it's high time for entrepreneurs to even think about what is the various avenues that are available for funding. How should I benefit out of the various avenues that are available? What is the tweaking that I should do in my current organization structure, business strategies, in my team, whatever mindset that I need to change? What is that I need to do? So this is a good time for an entrepreneur to sit back, take a call on this, and plan his journey towards this alternate funding mechanism, which is available. It's a 9-year-old segment now, tried and tested by various entrepreneurs, and all the information is on the public domain about these entrepreneurs and how they have grown over a period of time. So I think we have established a success story here. It's a matter of people, just realizing that, yes, this is a suitable path for me, and preparing themselves for this journey, important journey of being a listed entity. So preparedness is that you need to hire a merchant banker, and he will handhold you through this entire process. NSE also walks hand in hand with the company so that, we are able to help you transition this phase very seamlessly and be a listed entity. After being a listed entity, also NSE will be hand-holding you so that, you are equipped to handle all the compliance requirements that are stipulated by the regulators from time to time. So the preparedness of listing starts with a promoter changing his mindset to move towards transparency, to move towards disclosure, to move from a tax-oriented balance sheet to a growth-oriented balance sheet, so that they are able to enjoy the confidence of the investors and start their journey of wealth creation along with all the stakeholders. So that's how it is. We at NSE are committed to facilitate corporates in raising funds, and we will walk the path with the promoters, entrepreneurs, the ecosystem builders, that is the merchant bankers, the chartered accountants. And, since this session is held by ICAI, I must tell you this, that chartered accountants play a very, very significant role in this journey of listing, because what we have experienced from our promoters is they get interested into the idea of an SME listing. They feel that their company is the right eligible company who is in the growth stage, and they should. But what will always happen is, after they have heard us, they have understood the process, they would just go back and come and say, I need to talk to my chartered accountant because he has to be on board. Until he's on board, I will not take the further step ahead, So let me tell you that you guys are an important channel, important stakeholder, important partner in this ecosystem of facilitating the SME companies to walk this path. And what is there in for a chartered accountant? There are multiple benefits even for a chartered accountant or for a CA who's associated with a company. It's a win-win situation. He's able to garner this kind of, being a listed entity, chartered accountant, so he's able to expand his horizons on a multifaceted roles that he'll be able to offer. He can offer multiple services. His credibility goes notches higher when he's associated with a listed entity. So it's a win-win situation for everybody. Your company is being now acknowledged as a very highly credible and a great organization. So it's just about looking at that scenario and thinking about how our companies can make the difference by moving from a private limited company to a public limited company and being a listed entity and participating in this wealth creation journey along with the entrepreneurs. So time and again, we have seen this, that the chartered accountants and the company secretaries play a very crucial role in developing this kind of an ecosystem and strengthening this kind of ecosystem. So we do a lot of sessions with this chartered accountants along with various chapters. And today's one of the session is an important area where, we want to address this to all the chartered accountants that yes, it's an important decision of an entrepreneur. And you are, I think, the first person that he would approach to see how to go ahead with this. And he will also be walking the path with him. So it's very important for you to understand the nuances of this listing platform so that you are able to actually guide your customers and you guide your clients in the right manner. I would want to conclude saying that it's a great platform and, people have benefited out of this platform. All the state government, central government, the exchange is partnering with all the important channels so that, we are able to give maximum benefit to the SMEs to take benefit out of this platform. One thing that you would have seen is across various states have declared in their industrial policy that they would be reimbursing a portion of their listing fees. So you must have heard at various point of time, our honorable MSME minister making an announcement about a fund of 50,000 crores, which would be helping SMEs raise funds and they would be investing into the SME companies IPOs. A detailed guideline in this matter is awaited from the ministry. But it's very important for all of us to note here is that, everybody is taking a huge interest into the segment to ensure that there is continuity and growth by leaps and bounds into the segment. And everybody is able to actually contribute significantly to make India a real growth story. And SMEs are going to be the drivers for the Make in India initiative or the Atmanirbhar initiative. So take a leap of faith and start your journey by thinking about what is that you need to do and how you can start preparing yourself towards this listing on the SME platform. Yes, over to you, Parth, in case you want me to address any more further issues.
Yeah, I have a lot of questions for you.
Okay,
so
sure.
But it was very informative from your end. So I guess all the attendees must have been enlightened.
Thank you.
One question that, as a merchant bankers, we always face from clients that when is the right time to get listed? So what happens is a lot of entrepreneurs think that it is very important to time the markets, whether they should get listed when the market is going up or when they should get listed when the market is certain. So I think from the regulatory perspective, you will be able to tell that what is the time.
Yeah. I think it's a very, very relevant question considering the times that we are having now. First of all, there's nothing called as a right size or a small size or a big size kind of a company. Any company which is in the growing stage, which has shown growth over a period of time, is a right company to come and tap this market. First. The second is that when it comes to timing the market, I don't know what is timing the market, because markets are the most uncertain things that are, what happens, you sleep in the night, it was the same thing, but you get up in the morning, Nifty crashes, Sensex crashes, and just goes up, hits the roof, Singapore opened low, and markets are most uncertain things that happens. And I think people sitting out here all know that you can't have certainty in the market. The markets are going to be uncertain. So what, as an entrepreneur, you should look at is not time the market. You should see how prepared you are for listing, how prepared you are to garner investor confidence, how prepared you are to get your investors on board. That's the first thing. The second is that that you have a big advantage. The approval that is being given to the entrepreneurs for an in principle is for a duration of 1 year. So this is a great advantage. Now what happens is you get your in principle approval, and accordingly you have a period of 1 year to decide when is the right time for you to print the market. It's not that you have to take a decision immediately after the in principle approval has been granted. So you need to just see that, yes, for over a period of time, the sentiments are positive. My company is showing good growth. I have my company has great positive vibes or news that has come up across. So this is a great time. I'll be able to actually attract investors. So it's all about how your company fits into that kind of a situation. Regulatorily, you have a period of 1 year. So don't try and time the market. It's about what is your company's benefit out of it. What is your company that is able to deliver at that point of time and actually get the investor confidence? Because if you have to wait for markets to be certain, then I think it's a long wait.
Right. I agree with you. And the next question is already there are more than 20% of the companies which have been listed are migrated to the main stock exchange. So can you just put some light on what is the criteria for companies who have been listed on the SME to migrate, and how much time does it usually takes, and how is the process?
Sure. Migration, the requirement of NSE is that for a company to migrate to the main board, you have to be listed on the SME segment for 2 years. Your paid up capital should cross more than 10 crores to be migrating to the main board. So that's the second requirement. Your market capitalization should be more than 25 crores. So these are the three requirements for a company to migrate: a duration, time frame, and a market capitalization, and a paid up capital time conditions. These are the only three conditions. And one hygienic condition is about that while you were on the SME platform, your disclosures and all should have been timely. You shouldn't have faulted on your disclosures. There shouldn't have been any disciplinary action against your promoters by the regulator or by SEBI. There should have been no debarment orders. So all those hygiene checks also will be done. So this is our conditions for migrating. Again, it's an optional process that you have to opt to migrate to the main board. And time frames, once we have all the documentation in place and everything, it's not a very time consuming affair. That's it, I've seen approvals go in 2 weeks, 3 weeks time for company to migrate. And it's a seamless process. So today, if you're trading in SME segment, we give out a notice to the market, giving a 1-day indication, and from the next day, you start trading onto the main board. So it's a very, very seamless transformation that happens from listing from a small board to a main board. So it's not a difficult you don't have to do anything. It's just taken in the exchange backend as well. How you migrate from an SME segment SM series to an EQ series. So that's the only thing which is very seamless, and it's a very simple process, fairly simple process.
That's great. So thank you so much. I'll just take some more questions afterwards. So I'll just come back to you in a while. Meanwhile, I have a few questions for Mr. Amrit Shah. So, sir, your company have been listed as a earlier the company was proprietorship concern and in 2012, and then you moved to a private limited company, and now you're a listed entity. Who has been your inspiration? How you have thought for listings? Can you put some light on that?
Thank you, Parth. And how I came to this journey. 2012, we were in private limited, and after that, I was doing a small business in 1994. And since it's a gold jewelry business, a very precious, so it needs more fun. But at that time, it was the start of my career, and we started in 1994. I used to go many places here and there, and I used to trade. But looking at the margin and the risk factor, that time I decided to go for the manufacturing. And in 1998 onwards, we started a manufacturing process. And then we started growing a little bit like that. But still, it was not to that satisfaction level. And the main reason was that our industry was not an organized sector. So we were not getting any kind of finance from the banks or like that, So it was a very normal thing. And we would require the huge fund. So the thing from that we started, all purely all billing process. So without bill, we used to not sell anything. And that time we faced a lot of problem in doing that, because in market hardly few people were like that. Even the retailers were not supporting for that. So slowly and steadily we started like that, and slowly we got a good turnover year on year. And after a certain time, we got a banking facility. And once we got a small banking facility, our confidence level was so high that this is the only proper way. People used to tell us, many of the good clients were not ready to take from us. So because of our conditions and everything, but slowly we grown by 2009-10. It was a very good turnover and a good future for us, And that way we form a private limited company. And after that, suddenly, it was my dream to get on this platform for listed. We used to hear all this in IPOs and everything. We used to read in the newspaper. So we thought the day will come, we will also get listed. But when I used to spoke some person, they used to laugh. Okay, how this is possible for us? We are so small people. How? Because people were not aware. Now, as Rachna ma'am said just now, if Rachna ma'am would have said all this thing in 2015, then we would have come in 2015 only. The way she has elaborated, the simple language, so simple she has explained. Now, it's a very simple process to get the listed. Even today, I will tell ma'am, just, many of the people in our market, especially in jewelry market, have got a good potential, but people are not aware, and they are really afraid of all this paperwork and all these things. And some few, I will not blame anyone, but there are some few merchant bankers through which we have to go. So they also don't guide properly, So there should be some kind of, program that NSC people come and share all these things, And the criteria of 25 crores for paid up capital should not be more than 25 crores. So that has to be increased to up to 50 crores, So there are many few people who wanted to come, but they are about 25 crores. So that way also one of the reason people are not coming to this listing and all these things, making the public sector. So the main reason behind coming in this listing was from 2015 onwards. I had a dream, because the jewelry export was usually increased after 2015, and that time I thought that to be in the domestic market and doing this local business, it's not enough for us to just grow. We have to go for the exports. But again, I would say it's a very precious thing, and everything needs the funding. So again, the question, if we take the fund from the banks, that cost is very high and we cannot compete the market. So slowly we have started planning from there. And then that was the reason we have started the export in 2018 onwards. And then we got listed, I think, in 2018. And that was the main reason, And it's a very transparency, and now we are really very happy. We are secure from many angles. Initially, we don't used to get the insurance. We don't used to get any kind of banking facility in our sector. And nowadays, many of the people have come, corporates have come in this jewelry sector. Multiple showrooms they have, business have grown, something like that. So people are still, very afraid of coming all this paperwork and this thing for the listing and all this. So the main idea behind it is it's a very transparent business, and we are really very happy. So nothing burden like to hide something or to do like that or to like this. It's really good.
Okay. It's always good to hear from horse's mouth that how the listing has been. So I guess your experience has been good. But we'll hold on to you. We'll need some more advice. Like many entrepreneurs have a myth that post-listing your compliances increase and you'll have to have a lot of inquiries, taxes and burdens. So was that the case with you when you got listed in 2018?
No, never. It was never been. In fact, we are in discipline now. Otherwise, we would have not been so on the prompt in paperwork and everything. some type of negligence was going on. But since all the regulatory half-yearly results we have to upload and all the compliances what the exchange is asking to us is really more helpful for us rather than them, because it puts good discipline in our office management, and visionary we can decide on what stage we are. So after half yearly we come to know what is the going on, what is the profit position, what is the business position, where we have to do something, what changes we have to do. So anyway, it is very nice. There's nothing burden like that. And exchange doesn't, I don't feel so personally that exchange is anything, asking for more and more documents and compliance. It's not like that. It's a very simple process. So it's a kind of certain disclosures we have to give, and it is nothing wrong in that. So no burden as of now, what I felt.
Right. I heard you loud and clear. So next question is
I think Parth is I'll request you to wait for some time. I believe that Mr. Ketan Gaikwad need to leave for some time, after some time. So what I feel that there are some questions which we have received from the participants with respect to the receivable discounting and factoring. So I would
let this question get completed. He was asking, Parth was asking some question to Mr. Amrit Shah. Let that question get completed, then I'll answer.
Okay, fine.
No problem.
Fine, Parth,
I can wait for that.
Yeah.
I'll just ask one more question, and then probably what we can do is we can open the floor for all Q&A. Is that fine, Mr. Ketan?
Yeah.
Sure. So last question to Mr. Amrit. We've seen your balance sheets as far as your top line, bottom line is considered. So company has been growing at a annual rate of more than 20%. So what has been your success mantra, if you can share with us? What has been is this the exports that is helping you, or some internal changes that you have done? And what are the do's and don'ts? Means as a listed entity, you have some this is what you have to do and this is what you don't have to do.
No, as a listed entity, we are getting more preference for anywhere. Even if you go to any of the clients now, once they come to know that we are listed, they give us the first preference to do the business with them. In fact, they are more happy and satisfied to do business with us. Point one. That also we have increased the business in last couple of years. The main reason, Joy Alucas, Malabar Gold, all these type of corporates, which initially they used to not entertain us because of many reasons, So now they have entertained. So we have increased the clientele base. Point one. Secondly, we have started few manufacturing, which initially we used to take direct from the, we used to import certain things, or we used to take direct ready-made goods. That way we have started our own manufacturing. That is helping us more to create more new designs. Because usually if you find in our business, the only creation and designing is the major part to increase the business. And that's what we are exactly doing right now. So these are the reasons, we are, and the major thing is exports, on last couple of years, the gold export is increasing. It's a very nice, so there's a lot of demand from UAE, USA, Indian Kolkata jewelry, and our mastery and specialization is in Kolkata bangles. We are specialized in bangles manufacturing, handmade bangles, what we call, and that are made only in Kolkata throughout the India. So that particular item is in full demand in export. So that way we are already making from last 12 years. So that was also plus point for us to grow our business and fulfill the demand in exports. So that is the few reasons we are growing.
Okay. Thank you so much. So I think so we have heard what are the do's, what are the don'ts from Mr. Amrit Shah, and Rachna Madam has already told us how to get listed, why you should get listed, and what are the myths and what is the reality. So now I think we can open the floor for questions. Dureshji, we can ask some questions to all the panelists, and then probably it would be fair, right? I guess your voice is not. You can unmute.
Yes, thank you, Parth. There are certain questions which have come from Ketan Gaikwad. Reason being the RXL looks to be a new platform to all the people, though there are many other institutions which are dealing into the factoring. But the questions for Mr. Gaikwad is, RXL deals with which kind of commodity, whether there will have sector-wise buyer and seller details available on this, and who are qualified buyers for trades.
So to answer the question, we don't deal in any specific commodity. So basically, wherever you are the manufacturer of any commodity or any goods. So if you're a manufacturer or you're into the service sector and classified as an MSME, and you're into the business of manufacturing goods and servicing the goods, whatever, so you can straight away get into the RXL platform. Only thing is the last the Udyam registration has come in, which has excluded the traders from this particular ambit. So that is the only exclusion which is there. Otherwise, if you are a manufacturer of goods or if you are a service provider of any goods to the large corporates, you can come on the platform. So you can come on the platform. At the same time, all the corporates above 500 crores turnover have to necessarily and mandatorily register on the TREDS platform. It's a government mandate. So the MCA, that is Ministry of Corporate Affairs, is following up with the large corporates as well as all the corporates above 500 crores turnover to check whether they have registered on the platform, and if they have registered or if they are doing any transactions or not. And if they are not doing the transaction, why they are not doing the transactions?
So the another question related to this was the qualified who are the qualified buyers for trade, as well as how the trades trades is different from the financial institution factoring services.
See, the best part, thing about here is this is the first platform which is there for the MSMEs. So the factoring institutions are there; they're carrying out their own factoring, but they have a different scenario altogether, where they do not have an exchange mechanism. Here, the best thing about it is this is a without recourse program for the MSME sellers. At the same time, it's the mechanism wherein you discover the rates. So let's say when you go to a factoring agency, you are straddled with the rate which they dictate to you, and sometimes the rates are much higher because this is without recourse. So that's why when you come on this platform, the rate discovery mechanism, the transparent rate discovery mechanism is there, and that is the biggest advantage compared to the other factoring agencies which are there.
Oh. So then one more. What is the current volume? What will compel the buyer to accept the invoice? When there is a default, is there any disincentive for the buyer? What if the buyer doesn't have balance in the account?
So that's why it is important that whenever there is a NACH mandate taken. I have already covered that there is a NACH mandate which has been taken, because we have to keep it in mind that this is completely on the buyer's acceptance. The buyer has got the goods, use the goods, now he has to pay. So whenever he on the exchange, whenever he does the acceptance of the the factoring unit, then he cannot later on decline the payment for that, because it becomes an obligation for him to make the payment. So assuming on the due date he does not have the payment, then it follows the same process of default mechanism. So the banks will start reporting him into SMA 0, SMA 1, SMA 2, and later on for the default status. So that's what normally the process is. What is the default status on this platform between the three exchanges? We have done businesses of around 19,000 crores, and the default is hardly maybe not more than 200 to 250 crores. So the proportion is very less, and that also because here there are genuine buyers who come on the platform and do the transactions. And what will necessitate or what will force the buyers to accept it is basically the intention that it has to be an intention. There has to be an intention for the buyers to come on the platform and transact on the platform, because there are many buyers who are registered for the namesake, but they don't really do transactions also. So the government is also working with them to see how they can come and they start doing the transactions.
Okay.
But it's clearly in the hands of the buyer not to accept it also.
Okay. Yeah. Do you think, Mr. Gaikwad, is there any limit for buyer and seller with the finances? There has to be any limit with respect to the receivable?
No. So in fact, we have been telling to the large corporate buyers also that this is the best mechanism for you to utilize this particular facility, because this is an unadvised, unallocated limits from the financiers. And in today's world, where you know that there is something called a large exposure framework circular from RBI, this is something the corporates can use it, because there will be certain banks who would be willing to take limits on you despite not having facility given to you. So these are additional limits which you can say that, we can give it. At any point of time, if the corporate is good, there are many financiers who are ready to take limits on those particular buyers.
Okay. One more thing, do you have your presence in the GCC platform also out of India and GCC countries?
No, this is just
only for the Indian companies.
This is the first time this experiment is being tried, and later on, once this becomes successful, there are many countries which are keen on coming on board. So whether we have a presence in GCC, no, I don't think so.
Mr. Ketan, today there are many parties attendees who are from the GCC countries. They are attending. So this question has come from them. So they wish, because it has been written that it will be very interesting to explore expanding the receivable actions platform in GCC. Can you help me connecting with Mr. Ketan Gayakar?
Yeah, you can give my phone number.
Yeah, so I'll be giving.
Because this is something, let's understand one thing. This is the initiative by the central bank, which is the RBI, Reserve Bank of India, and the government of India. So very clearly, even in those countries also, it is not something which can be started on your own, like a fintech platform, but this is something which has to be started in concurrence with the RBI, the Reserve, the central bank in that particular country, as well as the finance ministry of that particular country, because the intention is very clear to help the MSMEs.
So one of the chairman of the chapter is had these questions from the other part of the world. So I think I'll try to connect you with them.
Yes,
so
very much.
Something can be worked out there, and the Indian presence can be there in those countries too. I think as far as the RXL is concerned and Ketan Bhai is concerned, these were the major questions. There are a lot of questions, but those are common. Many questions have come from different participants, but those are common. So I have selected certain questions and asked you. More or less, what I would like to say here is they are asking. This is in kind of FAQ kind of things. So if you have any FAQ for RXL, which kind of company can apply, can register, can they take the use of factoring, who will be the buyer, who will be the financer, and these kind of FAQ if you are having with you, and you can share it to us, we'll be sharing to all our participants and all our members. So we'll ultimately help you to generate more business on this platform, and this will become more popular.
So I will. What I'll do is I'll have a brochure which can answer many of the questions. So we will share across that brochure to the participants.
Please do that. Thank you, Ketanji. Thank you.
I need to move for a meeting. So is that okay if I leave the?
I think Parth, do you have any questions for Mr. Ketan?
Yeah, no. He can.
Or Amrit Bhai would like to ask. Yeah, Amrit Bhai may need the services of him.
Very much will be keen if he comes, if he has large buyers on the other side.
Amrit Bhai, you are on mute. Amrit Bhai.
Sorry. No, definitely. Just we'll go through it, and today I got understood everything. So let's see and study about it.
I hope my presentation was clear.
And since you are into the jewelry industry, the financing the jewelry would not be difficult for Mr. Ketan Gayakar.
I don't finance anyone. It is the financer who finances.
So yeah, financer is different, but you are the link for that.
Yeah.
So your financials
main bridge.
Yeah.
Okay, sir.
Thank you. It has been nice, and a pleasure talking to the entire gamut of all the people. And thank you to all the participants also for making time. And because it's very important that everyone understands what is TREADS, and the message about TREADS is spread far and wide.
Ketan, just a small one more questions.
Yeah.
One question has come from Meenakshi. I run an outsourcing IT company. Currently, yearly turnover is around 40 lakhs. I don't have any collateral. I don't need any equipments as my entire team works from home. Can I get funding, especially when I don't have collateral and I don't want to buy any goods equipment? I want to use money for hiring more employees, salaries and marketing. How do I get funding?
So understand one thing that this funding which is happening on this platform is against shipment or against services which are provided to the large corporates. And it's not just a collateral or without collateral funding which we do. So whenever you have done the services, so I would have asked the madam over there that if you are supplying to someone And if that buyer is on the platform, and if the buyer accepted a particular invoice which you have raised, then only the financing is possible.
So the important is both the buyer and seller has to get registered on your platform, RXL platform. They will upload their invoice over there. The both parties, each other party has to accept, and they finally financier has to accept. And at what rate financier is willing to finance this, that will be ultimately the things for releasing the finance under your RXL platform. Correct. So I think thank you, Ketan Bhai. Thanks for being with us, and thanks for guiding the members of the ICAI. I wish that we'll continue to have you as the faculty for the ICAI in some of
Very
the
much. It will be my pleasure.
Other seminars when we'll be dealing with the financing kind of things.
Yeah, you should call me, because it's very important that even your budding chartered accountant should know what exactly is all, TREADS is all about, because it's an important chapter of financing, and they should all be very importantly knowing about what is TREADS is all about.
Thank you, Ketan bhai.
Thank you all.
Thank you, sure. Krishna, we have a question for you. The person is asking, what is the number of companies listed under this platform? And we don't see IPOs coming in this segment and listing or trading happening in this segment. I think companies listed are more than 210.
Yeah.
The next part of the question you can answer.
So we have more than 210 companies that have got listed on this platform, and more than 3,000 crores of funds have been raised through this platform. What is happening with respect to IPOs? Actually, if you look at the IPO markets, are quite flat. We have had 2 listings post the COVID. We have had 3 listings post the COVID pandemic since March. So that's how the status is with respect to listings. But however, having said that, it's got nothing to do with SME segment per se. It's basically how the market scenario has played out. And even the IPO markets at the main board is quite flat. So that's the scenario across, I would say. But having said that, the positive thing is that, we've had filings that is happening. So promoters have shown their interest in utilizing this platform in the future, as and when the conditions are better for them to and have confidence of the investors, they'll be raising funds. So filings are happening, approvals are going. So if you see in a month, 2 to 3 filings do happen at NSE SME platform. So that's how it is.
So one more question that has came up from a lot of participants is what is the expenditure that is going to happen in listing? So that's maybe you can take it up or I can take it up. Both.
See, I think Parth would be the right person to guide on this. Yeah.
See, I don't want to talk about
she cannot directly talk on the expenditure side. So I think Parth would be the right person. You being the merchant banker and advisor, I think you are the right person.
Parth, please take this.
Yeah, sure. So I think 2-3 participants have asked this question, that how much is the expenditure involved in listing, and what are the costs involved. So overall, the costing, I would say, from end to end, from the time you plan your company to get listed till the company is listed, anywhere between 35 to 40 lakhs. And that is around 8 to 10% of what the IPO size is. So this is a fixed cost for processing the entire document. This includes your merchant banking fees, all whatever fees that is going to come in the entire journey from initiating the company to get listed till the final listing. So this is a tentative cost. Obviously, that depends from company to company and sector to sector. But on an average, this is the costing that you can expect.
And I think the market making cost will be different.
Yeah, so the market making cost is different. Yeah, that's the next question that is asked. So market making is been done by the registered broker on the stock exchange. So he has to provide a 2-way quote for 75% of the trading time. And market post listing charges anywhere ranges between 7 to 10 lakh rupees per annum for entire activities. Market making charges around 5 lakh rupees per annum. I guess these are.
Yeah, one more question. Market making was not very successful. There is a question. Market making was not very successful in Indian stock market. We are funding investment. this could be a concept for MSME to get a merchant banker for the IPOs in the segment. Is it right or?
I think for SME segment, market maker has worked quite well because we have seen mandatory liquidity being provided by the a lot of we've seen promoters being very happy with the fact that there is somebody who's there to take that pressure of market conditions and actually give the buy and sell quote on a daily basis, which doesn't cast pressure onto the promoters. And the investors also have an avenue of entry and exit because of the market making. So it's a regulatory stipulation. So I think we've not heard much inputs on that it's not working out. It's mandatory market making has worked for the SME segment is what my understanding has been. And when the companies migrate to the main board, obviously the market making activities stop. So after a period of 2 years, the market making has not to be even there. So I have not seen that as a challenge till now, or people have not raised that concern to me. It's been quite successful.
Okay, great. Then Parth, there is one question for you also. Dear moderator, if possible, throw some light on the venture capital funding available for SME. Which are the funds who are financing to the SMEs? There can be venture capital funds. There can be some startup funds who are financing these kind of.
Right. So, there are a lot of funds who are actively investing in the listed space also and the unlisted space also. So, some venture capitalist fund usually invest when the company has grown up, and private equity funds invest in a type of company whose top line is more than 50 to 75 odd crores or 100 crore top line. And startup, there are a lot of IIFs that are getting formed or investing in early stage financing and stage 1 and stage 2 financing. So usually if the company is in startup stage, you should obviously explore the stage 1 and stage 8. And when the company has grown up, you should obviously can explore the venture cap, the private equity financing in a grown up stage. So this could be the financing options available to them. I guess we have one more question for Rachna. It came from Mr. Vijay Kumar. A company who is doing well till now, due to pandemic, the top line and bottom line is affected. Will it be difficult to get listed?
Parth?
Yeah.
Could you please repeat the question? I didn't get the question. I'm sorry.
Yeah. So, ma'am, the participant is asking, the company was doing well till now. Means they were good top line and bottom line, but due to pandemic, both have been gone for a toss. So, will it be difficult in any terms for that company to approach the exchange, or there will be some problem as far as
See, I think if the company is a growing company and has shown consistency in their growth, and pandemic times, obviously the business model has taken a hit, that consideration investors would mostly understand. But what we would have to look at is, if you have made loss, are you still meeting the eligibility criteria of NSE for last 2 years of profits? So once that is taken care of, a dip in a growth, if explained well in the DRHP, as to what were the factors contributing to this dip, should be able to sail through and get you the kind of investor confidence. But on the eligibility criteria, we would have to look in detail at your balance sheet to understand, at your profit and loss account, to understand whether you meet the eligibility criteria or not. So if you are meeting 2 years of profitability out of 3 years of track record, then I think you'll sail through. That should not be a problem.
I guess.
I think there is one question from some of the participants, whether the CAs are covered under the MSME Act. Yes, true. CAs can register, CAs, lawyers and doctors can register under the MSME Act and get the benefit of the MSME Act. Very recently, it has been announced by the finance minister too, that you can avail the loan also, which is there available for MSMEs. So this is very true. You can be the MSME if you are chartered accountant registered under the MSME.
Sir, this is a question for using the MSME schemes by an individual.
No, by the chartered accountant. So the chartered accountant who are the practicing chartered accountant firms can get themselves registered, or practicing chartered accountant can register himself or his firm under the MSME and can get advantage of the MSME.
So sorry, this is not my domain. I wouldn't be able to.
Yeah. No, so I had replied because it has come.
Sure,
the
sure.
person who has asked these questions will come to know about it. Yeah, Parth, you can take over.
I guess we have, so
there are some more questions which have come. Stock price discovery. Easy, once SME listed on exchange, this price discovery will help ease of valuation. Is stock price discovery easy once SME listed on exchange? This price discovery will help ease of valuation.
Very true, sir. Yeah. This is obviously the most transparent way of price discovery that happens.
One question that is came up here about NSE, what is NSE doing to increase liquidity in the SME exchange? So per se, I don't think so. Liquidity is a constraint, but still you can take this up.
No, I think what I mean, I would like to add here, Rachana. The liquidity means why? Because there is a big
size of
size of your deal is very big. So if it is instead of 5,000, 10,000 shares, if it is 1,500 or so, I think the liquidity will be more.
Right. I'll take that question. There are two things that I would want to highlight because this is the most common question that comes across the forums is about liquidity issues in the SME segment. First of all, I want to tell everybody here is that, let's have an expectation setting correct for an SME platform. The most important thing is this is not a platform which is for short-term gains. This is a platform for a company, for you to participate in a growth story of a company at an early stage. So here we're talking from an investing opportunity for a longer duration, not for a first day listing gain kind of a investing opportunity. This is something where you partner with a company. You see the benefits of your investment into the company roll out in a period of 1 to 2 years. So this is a little longish kind of an investment opportunity that is there. So because of this, there could be liquidity issues. That this is a long-term platform. You cannot have an entry-exit like you have on a main board. So that's my first, thing about liquidity. The second, let's also understand by the regulatory framework, this platform allows an IPO to complete with a minimum subscription of 50 allottees. So considering a scenario where there are only 50 allottees or 55 or 100 allottees, obviously the liquidity will be not so significantly high with 100 shareholders in a company who want to buy and sell on a daily basis. So again, that's one of the regulatory framework which, constricts this kind of a high liquid platform. The third point again here is that the lot size prescribed in the primary market as well as in the secondary market is 1 lakh share and above. The idea behind this high lot size is so that, you have informed investors coming onto this platform and, they participate in this segment knowing fully well that this is an SME stock and, this is going to have a higher risk as compared to a larger corporate because, the size of the company and the growth propensity that this company is likely to show is not as risk-free as it could be a larger corporate. So I think that's one of the reasons that the reasons for 1 lakh is kept, the lot size of 1 lakh is kept at that level because just to ensure that you have informed investors participating. So all these three reasons lead to lower liquidity into this platform. But having said that, what NSE has been talking to regulator and proposing with the regulator is that at the secondary level, if the securities could be reviewed for a reduction in lot size. So let the primary market go through with a lakh and above lot size, but when it comes to secondary market, after a period of 6 months or a year, whatever it is, we are open for a discussion out there, and in representing SEBI also, that let the law reduce to a share once the company is into this segment for a year, 6 months, or specifically after 2 years when the company is ready to migrate. They may not even migrate if we reduce the lot size to 1 year itself in this segment. So we've been talking to SEBI on this platform, on this matter, and let's see how it takes forward.
Yes. Durgesh, you have to unmute, I guess.
Parth, we can dwell upon some other things. I think almost all the questions have been covered.
I guess
either through their presentations or by replying the various questions which we have asked in common nature. So most of the things have been answered. So
we can go on.
Would you like to add something, Parth?
So overall, I guess we have covered majority of the things, starting with Mr. Ketan Gaikwad, and then Rachna Madam telling all the details about how the SMEs could get listed. So one thing that came out of the session very clearly was Mr. Amrit Shah and Rachna Madam telling that listing, there is there will be a lot of value additions, but it is very difficult to define that how much it would be and what stage it would be. So we have to be patient and give itself some time to mature. So I guess the platform itself has matured from 2012 till date. If you see now, a lot of, as Madam was telling, informed investors are coming to invest. So this platform has reached a very as it earlier days, it was Nasdaq was also an SME platform and it got incorporated. So now things have evolved. So we are in the evolution stage. So we all should be patient and wait for opportunities to come up. So I guess things have moved on, and participants should come up, and there will be a lot of other benefits for them to get listed. So I guess Durgesh, we can move on. I think we can wrap this up.
Okay. Thank you, Parth. Thank you all. See, let me tell you all that today this particular webinar has been attended by more than 8,200 plus participants. So long list of participants is there and all got benefited by your advice on the listing, as well as how to use the platform like RXL, and how the companies, when they get listed on SME, gets benefit is being told by Ambed Bhai. So my thanks to Rachna Busayati for guiding the all participants with respect to SME listings and benefits of SME listings on the stock exchange, that too on the premier stock exchange of India, which is NSE and which is second largest in the world. And then my thanks to Mr. Ketan Gaikwad too. I think Ranjit sir, Chairman sir is also there. If he wants to add something over there, I thought he'll not be there, so I started wrapping up. I got the message from the office. So Ranjit, would you like to say something, please?
Durgesh, continue. Thank you very much for very nicely presenting all the questions and very nicely putting the question to the panelists. And you rightly said 8,200 plus viewers have participated. The question you have answered. Some were not answered. We can try to emails. First, thank Amrit Bhai, Rachna ma'am, Parth, and Durgesh Bhai, and Gaikwad in the absentia. And Mr. Gala has to leave in between because of some issues. So in absentia, I also thank him so participating in this webinar. And a special thanks to Durgesh Bhai for conducting entire show in a very niceful manner. Thank you very much. And over to Durgesh.
Yeah. So I was thanking to Rachna ji, and after Rachna ji, Amrit Bhai was guided what are the benefits of this. As in absentia, Ketan Gaikwad ji, because he has dealt with a new subject which was not known by all the participants. Some of the participants might be knowing about this. It is a new platform, though the factoring is done by the financial institution and banks. But there is a fintech kind of company which is available and which is making the financials also available in this particular form was not known to many of us. So this is a new thing which will ultimately help the chartered accountants, their clients, and why chartered accountants I am telling, because chartered accountants are working either in the company or chartered accountants are advising to the companies who are the manufacturers and traders who can get the benefit of this. So in absentia, thanks to Mr. Ketan Gaikwad. Also at last, big thanks to Mr. Parth, who was the moderator of this particular webinar, and as well as he tried to set the link between all the speakers over here today. Though I had communicated, I was knowing about this, but thanks to Parth for coordinating. After me, he has coordinated with all. He has prepared the questions, many questions, and how it is to be addressed. The whole session is to be taken forward. He has done all these things. So thanks to Parth also, and thanks to all the participants at last for listening. All the panelists as well as the moderators and getting the benefit out of it. Thank you all. Thanks to chairman and thanks to vice chairman also in absentia. Thanks a lot.
Thank you very much. Thank you.
So thank you Durkesh ji, thank you Rajneet ji for having us on this platform, and a big applaud to ICAI for holding such a mega conference, I would say. And it's always a pleasure to listen to our entrepreneurs, who share their journey of listing. It always gives us a sense of I feel a sense of gratitude, extremely thankful to Amrit Bhai for sharing his experience. And it's because of entrepreneurs like him who take the leap of faith, that we are able to actually promote this platform and create more and more awareness about this platform. And last but not the least, thanks to Parth. He's not only an important player in the ecosystem, but he's also one we work very closely with, and he works with the SMEs, understands the SMEs very well, and develops a path for them, helps them navigate through this journey. So thank you once again, Parth, for having me here, and thank you for moderating the panel. Amrit Bhai, thanks once again. Thank you so much.
Okay. Thank you all.
Thank you all. Thank you, madam.
Yeah.
Thank you, Amrit ji.
Thank you. Bye.
Yeah.